Yeah, interesting comments here from Boston Fed President Susan Collins, who is a voter this year. She's saying it's likely appropriate to keep policy rates at the current level for, quote, some time. Monetary policy, she says, is mildly restrictive, and she wants it there. Talks about financial conditions, usually meaning the stock market. She says they're a tailwind for economic growth, and economic activity has been holding up quite well, she says. Additional monetary support risks slowing or stalling the return of inflation to the Federal Reserve's 2% target. There are downside risks to employment, she says, but they have not increased since the summer, and she's hesitant to ease further without evidence of a further weakening of the labor market. Wants to assess the effects of the easing, the 50 basis points of easing that the Fed has done since September, to find out whether or not it's prudent to go ahead. Prudent, she says, to ensure inflation is on track to 2% before making further adjustments. The importance here, guys, it looks like there is now a critical mass of officials. I don't know if it's a majority, but a critical mass of officials either outright opposing a rate cut or suggesting the Fed should go more slowly. It's unclear if it's half of the 12 voters that you need or 6 of them, but it's close. This contrasts with a market that before Collins spoke moments ago and her headlines came out, there was a 64% probability of a December rate cut. It's now 61%. If the December inflation report comes out on time, that's a big if, it will be issued December 17th, and that's day 2 of the Fed's 2-day meeting. So, guys, this is really interesting at this point. There is definitely a divide on the Fed. It's a substantial divide at this point, where I would think you could have 3, maybe even 4 dissents if they do cut. And there may be as many as 5 or 6 who oppose a cut at this point. We're going to have to watch and listen carefully and then get this data, hopefully it's coming out from the government, to see if indeed either the labor market is holding up, as some say, or if the labor market is weakening substantially, or, of course, if inflation is under control. John?